What's up, you ugly, short, bald son of a bitch?
Welcome back to another video. Today's going to be like a trade. Actually, no, it's going to be like a weekly pile-up of what happened last week and what will probably happen this week or, tomorrow, Monday. So the first thing I want to look at, right? Obviously, what we want to look at is news. So what is happening with news tomorrow, which is Monday? Note today is December the 3rd. Okay, so tomorrow is December 4th. Tomorrow we really don't have anything for the DXY or USD currency. Factory orders monthly, that's really not a big deal. The more important facts are from Tuesday and Friday are probably the two most active days. Tuesday we have ISM services, PMI, and we have JOLTS job openings. Those are two pretty big high impact news day that we want to look for and possibly not trade during those days. Tuesday might be a tradable day, questionable. We'll see what happens on the day. Wednesday, okay, we just have ADP non-farm employment change. The good thing about this is that it comes out before market open, so we can, there's sometimes for price to hopefully reprice if there's a huge slippage. Don't think there will, but you never know. If there is, there is. But we will have time for pre-market to kind of rebalance price before market open, right? Unlike this news that comes out right after market open. Thursday, unemployment claims, again, 8:30, not super worried about it. That's the only high impact folder. It looks like the forecast in the previous isn't like a huge slippage too, so we shouldn't have a huge slip there either. And Friday is where we get the real stuff. So 8:30, we have average hourly earnings on the monthly, non-farm employment change, that's a big one, and unemployment rate with premium UOM consumer sentiment, okay? From 8:30 to 10, that's a huge hour to not trade, time period. And after 10 a.m. is still very volatile, still very risky. Again, we'll have to see the price action. See, unemployment rate, the previous was 3.9, forecast was 3.9, so maybe here if we see a slippage, that's going to be bad. It looks like non-farm employment change, looks like there could be a huge actual news here. Average hourly earnings doesn't seem to be too concerned here too. So what's going on from last week and what are we expecting this week? Okay, so obviously we want to go inside the weekly and figure out what's going on. So if we just look at the bigger picture right away, okay, I was kind of expecting for like the past 1, 2, 3, 4. Okay, so I would say 4 weeks ago, 4 weeks ago, I was expecting price to be bearish again, right? Because I saw this bearish pattern right here form, and I was like, okay, well, possibility that we can start coming down, right? Like any other move here, we come down, we go up, that's usual, and then we kind of keep going down. That's what I thought was gonna happen. Okay, as you saw, that is exactly what didn't happen. And if you look on the monthly, you can have a better idea of what's really going on. We are bullish, and I mean we are more than just bullish. This previous month took out not only 1, 2, but like almost basically 3 monthly highs. So it took out all that liquidity, okay, created some massive, and I mean massive displacement, which creates inefficiency for price to rebalance. Now, what does this mean? In my eyes, okay, what I see here, and I wonder if I can, I can't, but what I see here is something like this. I'm going to try to draw it without like, okay. So here's what I see. And this is, I'm trying to reenact this, but for you to understand better. This move up here, this whole move up, and I'll hide it in red or green actually, because it's like buying. This whole move up created inefficiencies, right? Fair value gaps, order blocks, more fair value gaps, mostly fair value gaps. Okay, so you can imagine there is many fair value gaps, right, for price to potentially come back too, right? Lots of fair value gaps. Just imagine like this, right? Because price delivered in a month, that means in multiple weeks, it had to do something like this, multiple weeks, right? Up and down, up and down. That means that on the month, it created one big fair value gap, right? Which is what I can see right here. So if we mark it right here, boom, boom, that's your monthly fair value gap, okay? And then what you can identify is there any imbalances inside this fair value gap, which are maybe more precise? And that's when you go on the weekly to determine that, okay? So on the weekly, what do you notice? There's the most visible fair value gap here, which is also near the consequent encroachment of that monthly fair value gap. So it would be reasonable for us to do something like this and have our value gap here, right? We'd have two, and then the price would trade in between those two. The only problem with that is what I see is the discount and premium. What did we learn in every single move, right? You can't buy unless you're in discount, and you can't sell unless you're in premium. So if we were to be pretty exact on this move, that means that, you know, if we just take the range here, wrong way. If we took, let's say, this to this, that means that our discount zone for this whole move would be from this candle under. That means that price would have to come right back down, all the way back down, but not all the way down here, just in this area somewhere. And I'm looking at this fair value gap. Notice how it aligns not only perfectly with the discount, it's also a very nice looking fair value gap, right? This is the gap that took out this, took out this high, which in a way created the market structure shift. Then there was a bigger one that happened here. Okay, so, you know, come back to the fair value gap. That would be the imbalance, the inefficiency that I would be looking towards to be bearish, right? Now, am I saying that price will come down? No. Am I saying that price will come up? No. Okay. What I want to do here is watch, right? I want to see how price reacts, and I want to see, can price really want to go higher? Like, because this is its own move, right? It's taking out this high, this monthly high that we will notice right here. This monthly high is what it's currently targeting, right? Because it's so close. We basically swept this daily order block. Now we're going to be trading above the consequent encroachment, which to me just shows, okay, we're going up. We're going to take out this high. But how far are we willing to go until we come back down, right? Because if you really look at it, there's a high up here. That's also it once. And then the major high that I'm looking at is this one, right? So in the moment, yes, on the daily, all you might see is, oh my God, this is the biggest move ever. We're coming to this high. This is the best day, whatever. But there's actually all this up here that it also needs to take if it really wants to go bullish, right? So, and when I'm looking at the daily, right, I can't make an OTE straight off the bat because we haven't had like a swing high. This day right here, right, if it closed under, then I could maybe do an OT. But even if we do it right now, right, even if we do OT here to, I don't know, here, okay, notice where the OT is. The consequent encroachment is here, okay, which lines up with this. The fair value gap that is closest to the golden zone. Let's look at the weekly, right? This fair value gap here isn't even in the zone that we want it to. The daily itself here is, there's a fair value gap here and a fair value gap here. So there's two like overlapping ones. So my suggestion is we're just going to do this. We're going to delete all of this. We're going to forget about it. Because what we do here, and what you need to understand very quickly, is that what I was just doing there is wrong. Not the analysis, but I was looking for price to come all the way down to then come all the way back up. I was predicting where the market was going, right? I was making assumptions. No one knows what the market is going to do. And with the news that are coming, I don't want to take the risk of setting my long-term bias to be bearish, even though we've been bullish for basically the past 2 months now. And in the next few days, we are still going to be bullish, and that's the bias, because we want to take those highs. Now, the real question is, after we take this monthly high, which is 100% going to happen, where are we going next? Are we pushing for a higher high, or even a higher high? Or are we sweeping this high, then going higher and sweeping this one to then come down to those inefficiencies? And then the real question after that is, which inefficiencies? Okay? Which inefficiencies? Because if you just look at this move right here, take this swing high to, I don't know, this swing low, right? Did price really reprice where the OT was? There was a fair value gap here. Did price really come? It came close, yeah. Okay, so we repriced near that. Okay, valid, if you will. Fine. Actually, is it in the... Okay, yeah, it's above. Okay, fair enough. Fair enough. Well, I guess the swing low on this one would be this, and then swing high. I'm just looking in the future. So, but the analysis that you should have, let's just dump to the 1 hour, just so we're more clear. This is the, let's make this a little lighter. Looks pink now. This is the daily order block that we had marked out. Notice how close we are to that monthly high, or that monthly buy side, which I'm actually going to turn this into blue because this is buy side. Also notice how we are trading currently above that consequent encroachment. So to me, if I want to see more bullish price action right off these candles, I do want to see price close above. I want price to close above, right? Off this doji, I want some kind of price to buy back, close above this consequent encroachment. It can still trade in the zone. What's the likely situation that it pokes out? Very. I think the current draw on liquidity would be this. Right, this would be the current draw right here. And even if you go, I don't know, I don't want to go lower, but if we just look on the 5 minute, this is pre-market, you know, fucking, this is a huge assumptions, but depending on where we open tomorrow on Monday, which I probably will not be trading because all my free periods are being taken by college counseling. Yeah, it's most likely going up. So that's just the update on there. I just want to look at, okay. So, just a few months ago, not even, I don't know. Yeah, actually look, 1 month ago, we were in fear. Okay. And now a week ago, we just turned into greed. Okay. The previous close was greed, and now we're going almost into extreme greed. Now, what does this mean? Okay. Notice how this over here, we were in extreme fear. Down here, we were in complete extreme fear that this was slip, and then we came all the way up. We passed this, and then we're in extreme greed, and now we're getting all the way up to these highs, right? Where this was extreme greed too. So now you're expecting something of a potential pullback, right? I think it's obvious that there is going to be a potential pullback. I just don't, yeah, I mean, look at this. So we had greed up here, and then we start dumping a little bit, then it becomes neutral. So, you know, greed, then greed, about the same level, and then maybe higher, a little higher, and then there would be extreme greed, and then we would go back to greed, and then back to neutral, start coming down, hits one of these fair value gaps that we've noticed, still in neutral, but wouldn't be in fear. There you have it. Listen, I don't have a lot because we're not trading, right? So I can't do analysis here, and I hate doing analysis in the weekend because there's really nothing to analyze. And what I really don't like doing is going on the monthly and being like, yeah, I mean, the monthly's going there and this is where the price should be and this is what you're supposed to trade. Like, no, I hate doing that because the monthly takes so long to get to a price point. Then the weekly gets long. Like, you know what I mean? It's just like you got to do it while it's trading. And the biggest thing is there's news, and high impact news impact the market. I want to see where price goes after those news impact, right? I could say, hey, we're going down for this week. And next thing you know, Jerome Powell comes out of nowhere and goes, fuck you, French trades. We're going to make the market go up. And your predictions are wrong. So what you did that weekend is wrong. And yeah, you would be wrong. So I don't want to do any major weekly predictions or weekly bias. I will only do that on Monday because anything can change pre-market or I guess after-market pre-market from right now to Monday open, or, you know, maybe Tuesday at 10 a.m. or maybe some high-impact news at 1 p.m. I don't know. Who knows? Okay? Lots of high-impact volatility news that may come out this week that may impact where we're going. Okay? Right now, we're in a phase where we're about to hit a monthly liquidity point, and I don't want to make crazy expectations or crazy theories of where price would go or where it's likely to go. I'm just pointing out the key areas of where it could go and where it could do. But am I saying it's going to do that? No. Or else I'd have so much stuff on my screen that it wouldn't be possible, right? So I probably could delete these because I don't need these. If I see that price goes up a little higher, I'd mark this one to see where that level is. But I don't need to mark it right now. It's a distraction. So tell you what, I will be back, okay, tomorrow to, if I don't trade, then I'll do like a trade recap, potential trades, or just a market analysis overall. I'll definitely do that tomorrow. Again, I got to study for a lot of my exams, so I don't have a lot of time. So you're lucky I'm doing this. All right. I'll see you guys tomorrow. Yeah. Peace.